This is our second panel of the Disrupted Bank track. And this panel is entitled The Battle of the Core. So we'll get into a definition of the core and what exactly is the battle very shortly. But before we dive into the discussion, I'd love for each one of you to introduce yourselves succinctly. And maybe we can start with the student at the farthest end of the
student end or
of the kindergarten.
I'll be next, I guess. I'll be the second one going. So my name is Danilkis. I'm the co-founder and CEO of Mambu. We're a SaaS bank and engine. We started in 2011. Right now we're working with about 130 organizations, ranging from fintechs to banks to telcos to lenders, who themselves power about 11 million customers in 50 countries.
Okay, it's my turn. So my name is Eonnet. I'm the CEO and co-founder of TagPay. Our background is interesting because I come from the smart card business. I used to be the head of innovation of Gemalto, and the co-founder of the company, my partner, is coming from the telecom business, and we've put our expertise together to design the next generation core banking system. So we've designed what we call a digital banking system, which is a platform that is managing banks. We have customers in 30 countries. And some are in Africa, in Latin America, and we recently have a new reference in Paris, in France.
Okay, my name is Martijn Hohmann. I'm co-founder and CEO of 5 Degrees. We're the next generation digital core banking platform. We run both core banking technologies on FX, savings, current accounts, cards on the back end, but we are also able to really orchestrate the client's journey from the onboarding till in the life cycle. So today 5 Degrees employs about 180 people, and we have more than 25 banks running our technology.
Very good. So I feel like the imposter because I'm not the founder of anything. So I'm the CEO of Finastra. We're the world's third largest fintech. We employ just under 11,000 people, about $2 billion in revenue, and we're present in 133 countries.
Wow, for an imposter.
But not a founder, not a founder. I wish I had the agility and energy of these guys, but
right.
Not quite.
So let me start you off with the conundrum that I'm in when thinking about core systems. First, my view is that in order to have all the better, more beautiful, faster, cheaper, more flexible things that are promised in financial services, you need to have a core system that lives in the 21st century and that is able to process data in ways that big tech companies process data, right? That's the first comment that I have. The second comment is there doesn't seem to be any new core system that is used at scale from very large banks. You might have a lot of actors that are trying to, to break and innovate into this market, but that hasn't happened yet. And more banks are using cores that are antiquated than not. And then, excuse me. Number three is, how do you break such market? Given that, for me and for a lot of people, a core banking system is actually not that difficult. It's a general ledger, a CRM, and maybe 1 or 2 core modules. And after that, everything is like customization. So am I oversimplifying? Am I looking at this and someone is already saying, yes, Pascal, you're oversimplifying. Or am I looking at this in the wrong way as far as what a core is and why do we not have cores? Or maybe we have new cores and I don't know about it. Who wants to lead us on this path?
Sure, I could start. Every single company, whether they use one of our products or not, has some sort of core, of course, right? You see some fintechs themselves who build it out. But effectively, what you want from the core is to be an enabler of your business, right? And for that, effectively, what the value of it should be a platform, again, whether it's one of our products, someone else's products, or built in-house, which enables you to bring your products to market rapidly, right? Which effectively means, from the business side of it, whichever products you want to be able to think up with, whether it's a lending product, a mortgage, deposit, current account, you should be able to configure the behavior, the financial behavior of that product in your core, and be able to service it through life cycle on the functional side. And then on the technical side, whatever, again, your core is, it should be something that enables your technical team to bring it out to the rest of the ecosystem. Ecosystem being your mobile app, maybe it's your smartphone, maybe it's connected to your fancy new big AI credit decisioning. So all of those pieces, all those attributes are what constitute a really strong core, right? So the complexity of it effectively it needs to be a platform that's an enabler of almost whatever the business or the technical teams can dream up of, which means the combinations of the capabilities of it are quite large and sophisticated, especially for organizations to do complex products. If you have an Emani license and all you do is a single current account with no interest, then yeah, your core is very basic. You have some debits, credits, and then you have some accounting. But that's not the reality of most financial institutions and definitely not the reality of most lenders.
Yeah, I can really follow up on that, because I think building a core, once you start it, there's so much that needs to be developed and needs to be put in place, because you're talking to a world which is still quite old-fashioned as well. So the number of protocols that you need to support, types of MT messages and packs and all the different type of protocols is also making it quite complex with the in financial industry. And in the end of the day, it is the financial truth of the bank. And I think that's quite an important thing to realize.
Yes, and I would answer another part of your comment. The idea that we don't have yet, this new core with, massive organization, whatever. This is completely, for us, it's even in our strategy. We don't think that the cores and the existing banks are going to switch from their existing core to a digital core. That's not the way it will happen. The market is changing. The market, in fact, is not changing because of technology. It's changing because the people are looking for new offers, new product, new positioning of the banks. And the digital platform, the digital core banking systems will come as a spin-off of the existing banks that will target specific population for specific products. And this spin-off is going to grow and become bigger with time. So it's not the idea doesn't consist of transforming the bank. I don't think this is feasible, or it's going to be very, very complex. The idea is to say, let's identify a population or a target or a segment that has a specific need, and let's build the offer, the banking offer, on the best tool that can serve them with this new demand that is coming up.
Yeah, I think it's very well said. So if I can add one comment, I think it goes back to what you said, Eugene, which is, what is the business model you're trying to enable? What is the customer journey you're trying to enable? And what is the persona you're trying to enable? And from that, work backwards. So if you're enabling a digital challenger in the payment space, the notion of core for them is going to be real-time payments and multi-rel and mass payments and high value and so on. But if you're enabling a challenger in the SME lending space, then it's going to move to commercial real estate mortgages and to some of the features that the colleagues mentioned. So the notion of what is a core is very amorphous. And I think what we really have to do is to assemble to persona, assemble to a customer journey, what you're trying to enable.
So presumably building or implementing a quote-unquote new core, or a core that is newer than what exists in the market, is easier for simpler needs, less interoperability with all kinds of bespoke things, and also easier for a smaller or younger organization. And then for a large bank with all kinds of specializations and geographies and so on and so forth, it becomes a very difficult problem, exponentially so, very quickly. So I guess my question is, how long can that last? How long until someone says, we cannot continue putting either Band-Aids or adding at the margin some customization, and we have to rip the heart?
Yeah, so maybe I can kick that off and then pass it the other direction. So, I think, on your title on the screen, it shows revolution. We would argue that it's much more about evolution. So what was kind of inherent in your comment is it is easier in Greenfield than it is in Brownfield. And where it gets interesting is where Greenfield meets Brownfield. And what you find is when that happens, you really have to focus on open architecture and open standards and REST open APIs and the way you embrace the ability to assemble to persona. So a huge part of our future, and I believe our collective future, will be the move towards a platform-based economy where we're leveraging the components and skills of others to give life and longevity to the brownfield whilst it gets renovated into more modern architectures and cloud-based deployments. So it's where Greenfield meets Brownfield that it becomes interesting.
Is that basically that saying that when Greenfield meets Brownfield, that the Greenfields are taking over slowly but slowly, kind of eating up the former legacy landscape?
Yeah, or said another way, brown will migrate to green. So let me give you a concrete example. If we look in our own business and our customers we serve, and I'd love to compare with you, the software that does facial recognition is not ours. We consume it from a fintech, right? The software that does validation of my face to government-issued ID, we consume it. The software that does gamification, we consume it. So more and more of those components, those services that are part of a customer journey, we consume across those brownfield cores at the same time as those brownfield cores move to the future.
Yeah, but that feels for me still kind of peripheral. Those are services that you might want to attach to the core of the bank. But still, also like you were saying, you feel that transforming the bank that you didn't see coming soon. So, but still, are we then saying that this will stay for the next 10, 20 years? The old COBOL systems which are still there?
Well, I'm betting on the fact that the small greenfield operation will grow and will grow very much. Okay, so, and also they will be segmented. It's not going to be like it is today, like one system for all. You know, I'm always saying that, you know, today we have one bank for everyone. Now we need a bank for each of us. It's going to be extremely segmented, and that will require some special tools. But I will go one step further. The revolution, which I agree should be an evolution, it's also an evolution on the business model of the bank. You know, the historic way of managing a bank is to make money on commission and interest rate. And we all know that the next generation, after the millennial, they will have a big reluctance to pay the bank to who they give their money. You know, the free service, free society is really progressing. And therefore the bank is going to have a hard time to increase the commission, and we know the interest rates are low. So the only exit to build a profitable and a new business model for banks is to have a platform that is sharing value, sharing data, sharing services, and therefore with this very open and very flexible architecture, which is what the digital bank is, the bank is going to be able to imagine new business model and new way to bring value to the actors of the local economy, and therefore to make money that way. And this is critical. So, and this requires an extremely short time to market. When there is an opportunity, if the bank takes 1 month, 2 months, 3 months, 1 year, 2 years to answer that need, it's dead. So it has to be fast. It has to be precise, sometimes temporary. We have to test, adapt, and scale constantly. And this is the logic of digital banking.
Eugene?
Yeah, if I could just add, I think the mental model that we have is, I think you guys all hinted at it, it's not the mental model of having one monolithic core system or whatever it was before. Now you're moving to a brand new one of our products. The approach is fundamentally decomposition based on specific business models. And I think there's a good story analogy of this having played out in the industry before, is that when you had factory floors back in the 1800s that were designed, they were designed based on one power source, right? Your power source was coal, so you had one huge coal producing power source in the factory, and then everything connected to one turbine from that. Now, when electrical power came around, obviously a lot of factories did the very obvious thing. They just took the coal plant and they replaced it with an electric power plant, right? But the most successful factories, and obviously if anyone's seen videos from inside Amazon, this is an extreme version of it, they replaced this with having tons of small pieces of electric motors and specific robots for specific functions. And of course, those type of organizations were far more able to restructure how the whole entire factory works because they weren't dependent on one monolithic sort of system. So I think that's the same analogy that we see probably playing out in the financial service organization. I think any bank that tries project and say, let's replace our old core with any of our products or any product in the market is fundamentally, I think, taking the wrong approach to it. They need to be looking at specific business segments, specific customer needs, and then trying to identify what is the right solution for that. Maybe in the exact same bank, they use one product for one business segment and our product for another one because they determine that that's the right solution for that customer segment. So it's a different mindset than a switch from one monolithic to a brand new, shiny, new monolithic.
Well, I've never thought of it that way, so that's interesting to me. My prior is you have a core system, right? The core system enables everything, and then the customization or the segmentation happens at the middleware layer and at the front end. So what all of you are saying is either there are greenfield opportunities with different types of core systems that are easier to implement and then they're going to grow, or we're not really replacing a core system that supports everything. We're replacing different types of core systems because the segmentation happens deeper in the stack as opposed to only in the middleware layer. Is that what I'm hearing? Is that what, I think that a couple of you have said
I would
that.
subscribe to that for sure. I think, but it does require, if you look at modern regulation, if you want to serve the same client over multiple product channels that you might want to serve with different cores, you need to have one version of the truth of the customer. So it's not the traditional middleware that you have to look at. So you have to be able to separate the client data in a very structured way from the product data. And the old core systems many times require to be the master of the client data as well. I think there we have a small kind of weaving problem that we might want to address. But if you have solved that one, it becomes easier and easier to have kind of autonomous product, digital product stacks that can be serviced with orchestration from a middle layer.
I think going to the word that Yves used, just building on what you were saying, Martin, so Yves introduced this word of platform. And if you take an analog in your mind and you take an iPhone and all the applications built on that platform, that's one way to conceive the banking future, as Eugene was saying. All of the services that you're consuming on a standard platform or an open platform that then enables you to have that single source of the customer truth. It's just the platform economy that we see upon us.
Our experience is, I mean, we've been developing our business in emerging country in Africa, where, you have this incredible situation when you have, 20% of the population that has a bank account and 90% has a phone and they have cash. And therefore, this population needs to have some financial services. And this was an incredible place where to build and to imagine these next generation banking systems. And what we notice is that it is really a complete separate operation. We haven't done neither integration except maybe sharing some data. But this is really the only thing, because it's a question of logic, a question of culture. The bank is positioned differently, the marketing is different, the branding is different. The people that you're going to target are expecting different type of services, and therefore there is no notion of layers. It's really a notion of starting another operation that is hopefully will become bigger than the legacy bank, and will slowly replace it. And it's done naturally, because if our experience is that the service that is delivered by the digital bank is much more attractive and fits much better with the people's life. So even if you are a customer of the legacy bank, you will need and you will want to open an account or to be customer of the new bank. So this is how it will work, and it will work, I think, rather slowly, because banks are doing a good job today. I mean, it's working, so there is no emergency to change the whole system. But there is some population, I'm speaking about the millennials and the youngers, that are not recognizing banks are their bank, and therefore those guys will certainly open new ways, and this new way of managing their money and getting some financial services will be supported by digital banks.
Did you want to add something to?
No, I think on that topic we covered, yeah.
Okay. So you have me thinking now in ways that I've never thought of core systems. I thought it was simple. They were monolithic and you had to tear them out. So I see evolution, I see segmentation of different types of core systems, so different types of. In product and product design, whether it's like a phone or whether it's a car, you have an evolution over time where every new layer of a feature or functionality over time gets subsumed or consumed by the previous layer. And you don't, as a consumer or as a user, you don't see it anymore. Cars, for example, 20 years ago, you were thinking, oh, this is like this new feature. This is fantastic. It's going to be sold on that feature. And now you don't even think about it. It's in the car and there's something else that came in. Do we have also that in core systems, or will have, in as much as what is a core system actually evolves, and there's like new things that used to be outside of a core system that are being integrated into it from a product development perspective, or am I barking at the wrong tree?
Yeah, so the car is a great analog for what we're going through in our industry, which is take a single car. So in that single car, the GPS system did not come from the manufacturer. The wheels and tires did not come from the manufacturer. The electronics did not come from the manufacturer. The ignition system. These are components which were assembled to persona for that car. Then you take a car manufacturer and you look across all of their car platforms. Take Volkswagen Audi Group. They own Seat and Volkswagen and Audi and Porsche, but they also own Lamborghini and Bugatti. And yet you can find commonality across all of those platforms, which is your question. So it's true for a car and it's true for a group. You're looking for open standards, open APIs, the ability to consume and embrace all of these fintechs which are here today.
But in the end of the day, the current banks are not really economical to take the same parallel. So I think incumbent banks need to become 5 to 10 times more less expensive in their cost to serve their customers and being even more compliant and more in control at the same time. So I do agree to the metaphor. However, we have to go fast, because I think if you do not change in the next 5 to 10 years, how relevant will you be as a bank tomorrow? And there's still so much old technology that was built before any one of us had heard the word internet before, and that's still there. How can you really become digital, which is more than only having a digital front end in an age like this, where there's still so much technology there which need to be renewed fast? And I think what you want to see is that they build kind of a based a little bit on microservices, kind of conceptual ideas, that you kind of create autonomous islands. And that's not only core banking. So it's going from a monolithic system to kind of a core banking landscape, which might be part of many, many different tiles that you put together.
Yeah, no, I would agree with you. If you look at the McKinsey report that just came out for banking 2019, your argument is transparency. It's there that the cost of equity, the return on equity of a bank is very similar to the cost of equity, which is a horrible position. So your need for speed, as you're saying, on addressing the cost to income ratio and driving revenue growth whilst you manage risk is critical.
Yeah.
So I was going to say, I think on the car analogy, I think the elements of it are true, but I think the question to me is about who kind of does the assembly. The value that we see for our customers is that they are interested in being able to assemble it and be able to swap pieces out very quickly, right? So for the most part, if you take the car analogy, they want to be able to replace their GPS map with a paper map, or the other way around. And they want to be able to do that without having to call Volkswagen and wait in queue, right? So it's actually a matter of having, effectively from our point of view, having the core, which is an enabler of how easily they can assemble and evolve those pieces, because the car analogy is interesting from the point of view of how you assemble it, but if everyone's experiences with a car is actually the exact opposite of what the banks want to have an experience. When you buy a car, it's probably going to be the exact same car in 10 years or 20 years, right? You might be swap the tires, but that's about it. The whole point of the FinTech era is the fact that it's constantly changing. So the bank that you build, the technologies you use, perhaps some of the components you integrated into it will look very different in a year or two's time, because you don't know what they will look like. You don't know what the customer expectations will look like. You don't know what the market will look like. And more importantly, you don't know what the new technologies will look like. So being able to constantly assemble and reassemble those pieces and having a core system that's an enabler of that, I think is the key value.
I think that's very well said. So to your point, right, today you don't buy a car. I live in London. I don't own a car. I'm part of a car club. On the weekend, I need a Range Rover to take my kids to school with all their junk. The next weekend, I want to have a sports car to go out with my wife for a nice weekend, right? So it's as a service and assembled to persona, and your persona evolves. It's back to your earlier point on the business model you're enabling. So the car is an analog of how you assemble, but the agility, the need for speed is something completely else. Agreed.
And here we speak a lot about the product, but again, I think that the digital bank is going to change the business of the bank. You know, the banks are used to deliver. I mean, I call that the safe culture. You know, the bank think that their role is to take the money, save it, hopefully make it grow, and deliver some product that allows you to spend and to move your money around. This is over. Now that they have to get out of this safe culture and go to the ecosystem culture. The bank has to become an actor of the local ecosystem. They have to deliver value services to every business line and to every partners, and that it goes further than the product. It's, you know, it's sharing, it's building together. Sometimes the bank is going to sell their service behind another service. You know, all that has to be invented, and this is what the digital bank is all about.
Right. My mind just exploded. So it's already been quite a battle to get banks to accept cloud computing, let alone regulators. But now you have banks using more and more cloud computing, right? They transact with Google, with Amazon, with Microsoft, and more of the systems are going onto the cloud, as opposed to owning them in a hosted way. But the word that you used was core as a service. So now we're going to have banks that are not going to, quote unquote, own the core within their four walls, but they're going to transact with a SaaS provider for that core. I mean, what's the probability that that's going to happen in my lifetime, knowing how bankers think?
It is happening.
It is already happening.
Fully, yeah.
Today in France.
And actually, what I find even more interesting, so you
A large French bank is doing a SaaS for their core system.
Okay, so we have two banks, Société Générale and La Banque Postale, who took our platform to launch new services. So Société Générale is in Africa, but Banque Postale is in France. They took our platform SaaS in order to deliver some digital banking services to every part of the group of Banque Postale. And they created a spin-off, again, called Easiness, that is delivering to all those different business units the digital, financial digital services that is SaaS-based, based on TagPay.
Sorry, I was going to say, I think it's not such a big shift. It's not such a big shift in mindset because the core itself, I mean, it's a mission-critical system and it has to support all the capabilities that we described. But in and of itself, it's not a differentiator. It's not a USP for a bank. It's an enabler of their USPs, and their USPs are going to be their customer acquisition, their decisioning model, their digital experience, etc. So it doesn't make any sense for them to build and invest in something that is A, complex, mission critical, and not a USP. So by that, they want to, of course, find partners, and they have for the longest time, to be able to effectively have someone that's providing those services. Now, moving and doing that to the cloud is simply something that's been happening in every single other industry, and the banking space is just simply starting to catch up to it, and doing so in quite a rapid way. I think if you were to look around the ecosystem maybe even 5 years ago, I mean, I don't know if we could count on our hands how many banks were running in the cloud, and now it's just not an issue. I mean, you have it happening in the UK, in Germany, in France, in Australia, South Africa, and this has all happened over the last 3-4 years. Fundamentally because there's now been technology like ours that is available in the cloud natively, the value of it is strong enough that the banks are actually then taking a close look at it, and hence they're bringing these propositions to the regulators and say, we want to do this in the cloud, and we and our provider have looked at information security, business continuity, et cetera, and here's why it's not just good, here's why it's better than what we're doing on premise. Here's why it's better than probably the top 5 banks in the world who have IT departments the size of Google. For everyone else, this is probably better.
And I don't want to underestimate the regulatory issues that exist, of course. Some countries, and I know all of them, don't want the data to be outside their own country for obvious, I would say, political, diplomatic, whatever, security reasons. So in that case, we are capable of providing them with a sovereign cloud that is going to be in their country. So it's a cloud technology, but it's not the global cloud that we use somewhere else. And there are some other options. We use the test platform, the development platform in the cloud, and the production platform is on premise. And by doing that, we increase dramatically the time to market. We decrease the time to market. Sorry.
Yeah, no, just to add, you said, will this happen in my lifetime? And Martin said it's already here. Let me give you an example of how it's already here. And it took us by surprise, right? We're a large tech provider, fintech, whatever. And this begins in the United States and then rolls around the world. So in the United States, you mentioned Azure, for example. We went from having pretty much an irrelevant relationship with Microsoft Azure to being the 30th largest consumer of Azure on the planet in 18 months, purely because of one product, which was mortgages, called MortgageBot. 1,400 institutions, all moved to Azure, one code line, being hit 400 million times a month. It's incredible how fast it's moving. In 18 months, from irrelevant to 30th largest consumer in the world.
Right, so
mind-blowing.
Let me formulate my next statement carefully, because I don't want to get in trouble for saying something that I shouldn't because it's confidential. Let's assume that there is a very, very large global bank out there that has decided that they are not going to use cloud computing because of whatever reason, security, privacy, everything has to be hosted in their four walls. And on top of that, they're building themselves their core system or the new core system. So what would each one of you tell that CEO and that chairman of that large bank?
Are you sure? Now, but even how big you are, the massive investments that cloud service providers are putting in the cloud. So, when you have really a cloud-native product, how can even a super large bank compete on the investments they do on data security, on monitoring, on all the aspects of that cloud? There's so much to offer there that I really think that banks should not try to invent themselves. we are not trying to invent themselves. There's so much great parties that can do that. We are focusing on these elements that make it really, like Eugene was mentioning, you need to be extremely configurable. Without any coding, drag and drop up, new product. Without any. So
Don't sell me. You have to sell the CEO,
Oh,
chairman.
That's extremely confidential, I understood.
Yeah, and I would add, of course, I mean, this is obvious. I mean, the level of expertise of the cloud host companies is incapable. It's not possible for a bank to match it. So this can be proven to the bank. But I would say the second thing is everything that the cloud brings, the flexibility, the cost. And also the fact that when you start to say, and this is something that I really fight sometimes against some banks, a banker is not an IT specialist. I mean, they have IT specialists, but contrary to what Pascal said earlier, I believe digital bank is extremely complex. I can tell you it is complex. And if a bank tries to develop it itself, I know it's going to be a dead end after 3, 4, 5 years. Just to give you some ideas, we release, all our customers have the same software. We make a new release every 3 months. Every 3 months, we upgrade between 20 and 40 new features that all our customers get included in the package, okay? But more than that, at the end of this year, we're going to have continuous integration, which means that we're going to upgrade it every day. And every day, they will get new features that will be available, and they will be the result of what everybody asks. How can you do that if you're a single bank and you want to evolve and to be at the peak, at the top of the technology? There is no way. So I think it would be a mistake.
I think the key question to me would be, it all comes actually down to people in some sense. So my key question to this bank that's assigned to do this is, do they fundamentally believe that they can go, forget the money part, they can spend $2 billion a year like AWS does investing in their data centers. Can they find the right people, the right talent to attract them, and hence have better people who can then create better services than they can get from AWS or Azure? And the same thing for other products and services. People, especially experts in technology, are the rare commodity nowadays. So a bank that's going to go in a path like that and say, we're going to do it all in-house, is actually making the assumption that they can go find the best people, attract them, and then spend all the money and time, et cetera, necessary to do so, right? And given if you can see how much, of course, Microsoft, AWS, and others compete for talent, a bank that starts to come into this, and banks may not sometimes have the easiest time of recruiting top technical talent for different reasons, has to compete in that space first, win that battle, and only then can they possibly think about how much money and time can they throw out building technology, and then, of course, hoping that it works. So I think that's where they need to be really thinking, is this what they really want to, is this really the war that makes the most sense for them to fight, given all the other things they could be doing in the market?
Yeah, I think they should spend their whole time looking for the ultimate bankers and not the ultimate IT engineer.
So just listening to you, it kind of reminds me of 3 phrases we use in our company. So one is, it doesn't matter how big you are, you still have the economy of scale of 1, which is kind of Martin's point. The second is, which is an interesting one, which is by definition, there is no differentiation in a back office process, so why are you building it? Which is kind of where Yves was going. And the third is, this is not a technology conversation, this is a change management conversation. There's a phrase in English which is very brutal, but it says that transformation is never led by the people who need to be transformed. Or turkeys don't vote for Thanksgiving, which is kind of the technology challenge, or the change management challenge that Eugene put down.
It's a paradox. I just add that it's a paradox in the various countries where I travel. I meet some countries, and I'm not trying to give it any name because they might agree on not agree on it, but they are very advanced in their banking industry. They are pretty. They're very creative. They're very innovative. But now that they're facing digital banks, they want to develop themselves, and we're going to see them decreasing because, of course, they will not have the dynamism and the creativity of what you just said.
But I want a show of hands here. Who's a banker in the audience? Please raise your hand. Who's really a banker? Come on. Stay with your hands up.
You have to say it's safe to do so.
It's safe to do so. We're not going to... All right, stay with your hand up. All right. Remain with your hand up if you're happy as a banker when someone is going to tell you your core system is going to be uploaded seamlessly like the OS in your smartphone. I saw a couple of, but there's only one. Oh, 2. Right. I think that cultural-wise, I think you have like a lot of work to get that vision done.
Like every change.
And what is the key? I mean, what is the key to get a banker to say you don't need to own the core system? It can be delivered on a SaaS basis, and we're going to give you every day, or like the App Store, you know, an update, and it's going to be secure, safe, and it's going to be fantastic.
Just if you have experienced it and I can bring it to a reference client, and we all have them now, then you can focus on running the bank instead of running the technical management of your landscape. It saves you a lot of time, effort, and the right focus. People have seen it; they love it. It's when you have seen the first iPhone. The moment you saw it, you knew you wanted to keep it, and that's with very advanced cloud banking as well. It's just there; it's always on. And somebody else take care of the rest, and you focus on your business. That's what all bankers want. But just until a couple of years ago, they didn't believe it was feasible. And they come up with all kind of arguments that regulators wouldn't allow it, that the risk manager wouldn't allow it, that compliance was concerned and everything. But now, I wouldn't be so sure if I would be that banker trying to use that argument. I think you will be seen as a really old person, I guess.
Old people are in bank boards.
Well, bankers read as well, so they know that they cannot come up with this argument anymore.
I think also the iOS analogy is a little bit, I mean, it's simplified, but the reality is actually the whole deployment, the operations process is more complex. The better analogy would be if you actually had two iPhones. One of them was your test iPhone. You got the new version of the iOS 13. It ran all its automated tests. It showed green and it worked really well. And then you said, okay, now for my real phone, I'm now ready for this version. That's how it actually really works properly in the real world. It's not like you upgrade to iOS 14 and then kind of close your eyes and hope all the apps are still there, right? It's a completely different process in a mission-critical system. So the whole deployment process, the whole operations of how you work with a SaaS provider is, I mean, obviously we simplify for these conversations, but really I think there's three critical elements, at least for us as a SaaS company. One, from a product perspective, one is of course the functional capabilities. What can the product do? That's relatively straightforward. The second part is the technical capabilities, both on the API side of it, but also how the platform scales, how it behaves just purely technically. And the third really critical part is the operations effectively, especially a SaaS company, which is exactly that, is how do you do new releases, how do you manage SLAs, how do you manage information security internally with the customers, all the far less sexy parts of that, but still a very critical part of a relationship with a SaaS vendor, right? So while we simplify how it is to deploy it, and of course you can do deployments nightly, the actual process and the testing of it and the gates to make sure that what you're deploying is really solid is quite different than updating to the latest iOS.
Fair enough. All right, but previous panel, the first panel, I asked everyone to, in the end, to be a little more personal. And I'd love for you also to be a little more personal. If you... Hello? Yeah, there. If each one of you could, you know, give your perspective on your company and where the market is going and how you're going to follow the market strategically, I think the audience would love it. If you could.
Sure, yeah. So I mean, I see us really going through kind of a FinTech era, and what I really mean by that is the fact that it's really the elevation of the technology aspect in financial services to be a peer of the business, effectively, to be a partner in that, in the sense of different changes being driven both by the business side, but also what technology enables and what technology expectations are for different customers. And I think we're still very early stages of the whole entire FinTech era. And for me, what's really exciting is that I think the most successful companies, whether they're venture-backed FinTechs like Number 26 and other, or whether it's BBVA that goes on a new digital journey, those organizations, the successful ones, will be like in every other space where technology-enabled companies will be the most successful ones, the ones that actually really take technology to the strategic level rather than coming up with a business plan and then shooting it over to the CTO and says, just get it done. It has to be kind of a partner in that. So for me, what's really kind of exciting is the fact that there's going to be so much change in the space, and for us, I see Mambu as a really key enabler of that journey, of the different journeys that all the different organizations are on. And I think for us, it's just really just the beginning of the change of the whole entire landscape. And so for me, it's really quite exciting to be enabling so many different business models and so many different markets, be learning from a lot of the different organizations, and then putting that back into our own services and product and putting that back into the market. We think it's a very kind of healthy feedback loop, which helps to create financial innovation effectively?
Yeah, briefly, so TagPay, personally, you say, huh? It's an incredible adventure. We started by identifying the Africa and Latin America. We've developed the product there. Now our goal is to bring our expertise to Europe and to America. We are looking for visionary bankers who see the next cycle that we're coming in. We're going to bring the banks to their next cycle, the cycle after the legacy CBS. That is going to be a complete new, I would say, world and new opportunities for the banks. And we are dimensioned to follow all our customers all over the world, and we've done that already. And this excitement of innovation is not going to be limited to us, of course, because as we said, we are in an open world. So the idea is to partner with as many people as possible in the landscape. Just to give a hint, so that you see our mentality, our platforms in the cloud are all connected to one hub. It's called Tag Hub, and every connection of every type of service is connected to the hub. So which means that 40 banks that we have today, or 35 banks that we have today, are using the same type of service that is available on the catalogs of the partners. So this kind of logic makes us extremely ambitious on the market, and we are ready to be active in this part of the world now.
Well, thank you. Yeah, for me, a little bit, you asked me to be personal. I think it's so extremely great to be part of this decade. We have seen the banking space not really changing, not really transforming for the last 10 years. And we are in a space with 5 degrees now. We have a bank as a service ready in the cloud. It's 100% configurable. We have a great ecosystem with FinTech partners that you can adopt with just a few clicks and drag and drop. We are going for the no-coding bank. And I think that should be things that everybody would want to work with, because then we're faster than the marketing department. And I want to actually invite also the IT people from banks to come work for us, because at 5 degrees you're the hero and not supporting. And I think we also provide a really great personal experience for our people. And I hope to be part of that transformation. I would hope to look back in 5 to 10 years from now and say, well, wow, we were there and really helped to move the market a little bit and make banking fun again.
That was a great recruiting pitch, by the way.
Thank you. I
That was
need people.
LinkedIn Live right there. So, you know, we were saying earlier that we have like 10, 11,000 people. If you call any one of them and ask, what is our purpose? Why do we exist? They will tell you that we exist to help unlock the potential of people and businesses everywhere by becoming the #1 open platform in financial services. So an example, we have about 10% of global trade finance running through our systems. What if we can help bring millions of people into globalization and global trade for the first time and resolve the $1.6 trillion trade finance gap? We have $10 to $15 trillion of loans in our system which are illiquid and transparent. What if we can bring liquidity to global lending? You know, we have 175 million bank accounts live on our system. What if we partner, not compete with the 3 people next to us in an open platform way, and we bring 500 million people into financial services for the first time? These were aspirations that we would love to fulfill.
Fantastic. Less than 5 minutes. Any questions from the audience? From bankers that would like to a job with 5 degrees?
Yeah, I'm going to compete with Martin.
Anyone? Yes, there's one.
Thank you for a very interesting panel. A question: how do you deal with legal environments that are so different from country to country? Like, our banking group is operating in Europe, and also we have huge differences. So you have all this configurations and the fee limitations and the interest rate caps and the payment allocation differences and whatnot. It's to everyone.
Yeah, sure. I mean, I'm very sensitive to that, because this was one of our concerns when we started the company. Our job is to make a product that is adaptable to any type of regulation and central bank constraints. So I'm not saying it's easy always, but we have been compliant with 30 of them, you know, all over the world, and now France. It's one of the quality of, you know, when we're speaking about banks that develop their own platform, of course, we only know their local regulation. It's not at all our case. We have included in the design, the architecture, and in our expertise to work with all those regulators and to be compliant, and this is what we do.
At least don't try to code it. Then you're getting into trouble.
I think it just, from a product perspective, it comes to just coming back to first principles. So if you have specific legal requirements, trying to understand what are the fundamental building blocks of that, let's say interest rate caps, and then you try to create configurable capability in the product such that you can support not just that use case, but effectively any variation or permutation of that use case. And if you apply that to a lot of different features, then effectively you find you cover actually most of the requirements, because it's not like the landscapes, there's different interest rate caps in terms of numbers and some behavioral rules, but the principles are actually very similar in almost every single geography you go to. So if you do that, you can still build a single code base at a single platform like we have at Mambu, which operates everywhere from China to the US. But you have to go back to first principles, and it's harder because it usually fundamentally means just more work on the product side of it to fundamentally build something that's more configurable. I'm sure you could do something that solves it for one particular market much quicker and cheaper. So you have to do the hard work of doing the longer track every single time. And that's an investment you fundamentally have to make into your platform.
One last question. Anyone? In the back there.
So Balázs Vinay, Google just got an Emani license in Europe, and Alipay is also announced that got it in a new one. So what do you think? These big techs is the potential new clients of the future or competitors?
I think it depends what they want to do with the Emani license. I mean, I've read the similar sort of press release, but I think it comes back to having conversation about what their objectives are, right? And then that will determine what do they want to focus on internally, what do they want to differentiate on and invest in, and versus what do they want to differentiate, what does it make sense to partner with a provider like us for? I think it's highly unlikely Google itself wants to get into the same service space we want to. They obviously want to focus on something like on customers. Now, whether or not they need a core solution like we offer for their business really comes back to understanding what are they trying to achieve, both in the short term, but also what are their aspirations in the next 5-10 years as well.
Yeah, I will answer very fast. I don't know if it's working. For us, it's a very good news. I mean, it's the best reason for the banks to move and to become digital, and we have the tools for them to be competitive against those big guys that will not win if they do the right move.
All right. Time is up. Thank you very much.